I feel like there's more in life, and I think I have the capability to do it. If not, I'll figure it out. I just won't give up. So that's why I just took the plunge and say, hey, I will do this.
Warren Buffett knows what he's talking about.
Don't you mean Warren Buffett?
All right, what's up, everybody? Welcome to episode 29 of the Richuation Room. Very excited to have Cody Yeh on the podcast today. Cody, what's going on? Thanks for doing this.
Hey, Richard. Thanks for having me.
Absolutely. Let's jump right into it. So for those who are not familiar with you and your background, give us kind of a short history of, where you're coming from and the steps you've taken to get to where you are today.
Yeah. So I was born in Taiwan. I came to Canada as a student when I was 18. And I have to gone through all the high school credential because the school here would not let me transfer those credit. So, I catch up all 3 years of program in 1 year. Then I applied to all the major university in Canada. And I settled in, mechanical engineering at University of Toronto, which is considered one of the best school. And, I learned, I enjoy the engineering stuff, but what I enjoyed more was actually the accounting and then the finance stuff. And I learned about stock and option back in school. So I was dabbling in and out of stock since 2011. And then I was going up to like 2016, was doing well. Then I got introduced to a trading coach in Taiwan. She was actually day trading stock future index in Taiwan and Hong Kong, right? And that's when I get the mentorship and I start playing with it for 2 years. So what I was doing those time is I worked full-time as a project engineer. And at night, I actually day trade the Asian market because of the 12-hour difference. I'll be able to do that. So I prepare the trade for an hour or two. I trade for an hour or two, and then write report for another 2 to 3 hours to reflect on what I did on that day. And, is that a right decision? Is that a greed? Is that a fear? Is that part of my strategy, right? That's how I improve. And I was like basically grinding out for the first 4 months. I was constantly losing money until I get my mind right? And day trading is a very difficult thing. So while I was doing that on the side, I was doing stock and option on my phone while I was at work, right? 15 to 30 minutes during the day. And I had great success. Yeah, that's a lot easier. You can probably echo to that, right? Selling premium is a lot easier. So I stopped day trading because I fell asleep in front of my monitor 4 days in a row. There are days I'm just drained from work and I just fell asleep having big position on. So I thought, hey, I make equivalent amount of money. Well, not as lucrative as day trading, but my life is a lot better. Like when I was day trading, all my white hairs were coming out, right? I was only 26, right? And now I'm like 30. I just turned 30. But back then I was like 26 and all my white hair are coming out. And whenever I'm not day trading, I'm attending real estate seminars, right? So, and I'm listening to podcasts while I'm driving for an hour one way, right? So that's the way I was grinding out. Without those, I would not be who I am today. But looking back, man, those days were grinding, right?
Absolutely. So when you were in college, were you doing any of this day trading while you were in college? And then it sounds like you got an engineering degree, right? After that. So just kind of take us back to kind of the time in college to then, what job you were doing after college while you were doing that day trading.
Yeah. When I was in college, to be honest, I was like very happy, got into the top school, right? Asian family, parents are proud. My dad was like, hey, Cody, now that you got in, make sure you don't get kicked out, right? And because what the professor said in the first year was look to your left, look to your right, one of them will stay. But during first year, when my best friend, my best female friend, my best male friend, they're both gone at the end of first year. So I was devastated.
Yeah.
I was like, yeah, even my roommate was gone, right? Now he's in Holland or whatever. He said, that's not for me, right? So there's a lot of pressure. So and first year, I really enjoyed the life. I try to learn as much as possible. I learned accounting, I learned corporate finance in second year. So, but the way the professor taught me doesn't make me excited, right? Just teach, hey, this is stock. This is how option work. I'm like, okay, great. Yeah. Okay. But I don't feel excited because there's one thing about the concept. There's another thing about execution, having that confidence to see how much you can achieve with this, right? What are the worst case, best case scenario? They don't teach that. They just say, I want you to calculate the pricing. I'm like, okay, great. I could do that. But I wasn't excited. Right. So I took many other courses later on and then, have coaches and figure it out and say, okay, I know what are lacking in the public, right? It's mostly not the concept. You can read a lot of books for concept, but it's the execution side of things that's lacking. People need that confidence, someone to hold your hands for at least a couple months, right?
For sure. And when did you realize, because it sounds like you've shifted away from the day trading. So when did you realize that this wasn't for you, or maybe this wasn't worth your time and you need to kind of shift your focus?
Yeah, a great question. So I was doing that for 2 years, right? So
Having success or
yeah, first 4 months I was grinding out, kept getting stop loss, right? So I have a very tight stop loss, right? But what happened? Like this is what I share, what really changed my day trading life. Some of your audience are probably day trader, is when you're constantly losing stop loss, whenever you see a profit, there's something inside you that wants to grab that right away. But if you constantly, if you lose more than you win and you
right.
grab a small profit, eventually it will be a negative result, right? So it's that idea that, hey, if it starts running in your direction, you have to set in the right mechanism to stop profit, but not just take it whenever you need to, right? Then that's after that mentality change, having that mechanism setting up stop profit, constantly moving up my stop profit whenever there's a pullback and just let it run, right? So I can't get 100% of the up and down, but if I get 70% of most of the time, the probability will win. I will start winning, right? And that's what happened. And it was very good, but it's just boring, like excruciating, like staring at my Ford monitor 1 to 2 hours after my full-time job and write another report. Every single time I enter or exit, I write a report. Why I do that? What was the point? What's the reflection, right? So that was painful. But I actually manually like drew out charts afterwards. So that's why my coach taught me is if you want to be good at charts, you have to hand draw out to get a feeling because every market has their different participants. So
Right.
most of the times the same participants. So if you want to know who they are, how they behave, you have to draw it out, right? So those are painful times, but that's what helped me get to where I am today. But yeah, like not to brag or anything, but at that time our system was to use 10% of the capital. Okay, so if I have $10,000, only use 10%. First 4 months, I grinded, I was losing at 20%. Okay, but it's fine. But afterwards, I end the year with 66%. So that means I use 10%, I am up 66%. So if I could have used 100%, I'll be 660%. Again, my system, the system I was taught was only use 10% because we have a mental health very healthy that we're not always all in, right? So if it's 10%, you can kind of pull yourself back, be more objective, right? If it's a win or lose, you can cut it, right? But if you're constantly all in, it's totally different, right? And then the odds, there's a probability side. If you're constantly all in, you can wipe out really soon, right? So, but it's a lot of stress, right? So what I realized, hey, I'm getting a good results on the option as well, stock and option on the selling side. I'm like, I can get my life back if I, once my students learn how to do it, they could just do it for 15, 30 minutes. Sometimes they don't even put on any trade. So they get their life back. It's a lot of times not just about how much return you get, is what's the quality of life? What kind of lifestyle you want, right? A lot of people has a full-time job. To have another day trading job might actually hurt their full-time job, hurt your family relationship, hurt your relationship with the kids and all that, right? Imagine you're constantly, looking at your screen and your dog comes, your kids come, you're like, sorry, I'm busy. Like go out, like lock yourself in a room, right?
Yeah.
That's not a good quality of life. And eventually something will crack, right? And then
Yeah, for
everything will
sure.
just tumble.
Yeah.
Yeah.
I definitely see that with day trading. I haven't done a lot of it, but the little bit I have done, it's like, man, you're just staring at numbers on a screen for an excessive amount of time.
Yeah.
And then like you said, it's making that judgment call of buying versus selling. And then you almost always could have done a better job, right? Rarely are you going to exit a position at the perfect time. So that's a lot of scrutiny kind of as well.
Yeah. So it's totally different system. And I think only a small amount of people are meant to do day trading. Hey, not to say there's no success. I have seen success, even done it myself, but I don't teach that because I know 95% of people will fail.
Yep.
Not because I don't teach you the right way. Even if I teach you the right way, it took me 4 months to get it. And like I said, I was trained under a lot of high pressure on the engineering program, right? Everything is like boom, 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 get it done, right? But not everyone has that kind of mentality, right? That kind of reflex and a little bit of talent too. So I will never teach that. That's yeah. I don't want my students to come back and say, Cody, I lose money 95% of the time. I don't want to hear that, right?
Yeah, emotions tend to take over regardless of what teaching you get from could be the best teacher in the world, but emotions
Yes,
tend to take over.
that's a very key point. And it's like everyone could get taught by Einstein, but not everyone's going to
Yeah,
become Einstein, right? Yeah.
absolutely. So shifting from there to what you're doing now, sounds like you were maybe doing them concurrently, but then decided that selling options maybe was the more streamlined and easier, or at least less time consuming way that you wanted to go about doing this. So talk about the shift there, and then kind of the steps that you took to get to the situation where you are now, where it sounds like you're doing this mainly as a full-time job. Is that correct?
Well, yeah, I quit my job earlier this year in January without knowing COVID is coming. So within 2 months, I quit in January, then COVID coming. I'm like, well, in hindsight, maybe that could be a good decision. So I was earning a good salary. I was earning like six figure before I quit. But my profit, I have a bigger account at that time. I have 150,000 in Canadian, right? I was making roughly, probably similar to what I earned in my six figure job, right? With, because I treat it as capital gain. Again, this is not, accounting advice, but I was treating it as capital gain. So because of more beneficiary tax treatment, actually end up to be around the same as my full-time job. And then already bought, I bought some real estate. I have a real estate portfolio. So there's some cash flow. And because real estate gone up a lot in Toronto, right? The
Hmm.
appreciation just phenomenal. So the ROI of that is it's just crazy, over 100, 200, sometimes 300%, right? Because we're inheriting leverage 3 to 5 times. So with that in mind, I was like, hey, I want to do something what I really want, but instead of, I don't want to just, in a mid management job, I was managing 11 engineers, great people, all that, but I was being slave driven, right, at work, and I have to force a slave driven, my my engineers, right? So I don't like that. That's not part of me. So I was just like, you know what, I feel like there's more in life, and I think I have the capability to do it. If not, I'll figure it out. I just won't give up. So that's why I just took the plunge and say, hey, I will do this. So that's why I started the YouTube channel. There's 15 video there. YouTube's paying me around 1,500 to 2K per month just on the 15 video.
Wow.
Man, that was kind of crazy, I know. And then I started building out the course for stock option because of all the course I took. I found the pros and cons, right? I put in my own experience from day trading in it, right? And that's what differentiates my course is more execution and give people that confidence, right? Go through up and down and build course. And now I have the VIP program. I only have a handful of them. People actually see my position. The moment I make a trade, and then we have a small group coaching calls. And yeah, and then from there, I have some, the next evolution is I'm currently talking with like accounting and lawyer. They're high net worth people. They want to invest with me, invest together to see the proof of concept. And then, once they see it a year from now, I'm thinking about launching a hedge fund.
Nice.
So that's the next evolution of stuff, right? But hey, I'm not a trust fund baby. I build it from ground up, right? Like you see, I have student, I have VIP, I have an investing partner, then people trust in me. So along the way, if anyone asks me, can I talk to any of your referral or past student? Great. All of them are willing to hop on the call. They just message me and say, Cody, this is so great. It's life-changing. If you need me to hop on a call for you for free, I don't care. I want more people to see it.
Yeah.
I'm like, thanks, but so far I haven't need to do that. But yeah, that's just kind of the thing I want to hear, right? I help a small amount of people. They get good quality, right? And I have a good reputation, and I maintain that reputation, right?
So that original capital that you had working for you when you were like, hey, I'm almost able to replace my normal job with this.
Yeah.
Was that just capital that you had saved from the job that you were working?
Yeah. Hey, I grind really hard. So when I started working full time, even when I was working as an internship, right? I used to work at Honda, the car company where they built, Honda Civic and Honda CRV. I was an engineer there, right? When I was an intern, 2013 to 2014, I was pulling 600 hours of overtime because I want to get paid more.
Wow.
I want to save up for my first house. So if you think about that, 8 hours per day, I was working 80 days more than anyone, right? So after I graduated 2015, I did that from 2015 to 2019, right? Move up the rank, get more projects, get more exposure, get more experience. So averaging, I was 400 to 800 hours of overtime and that job, right? So people say, hey, Cody, you have it easy. You have a big account. Yeah, I grind out really hard. Whenever I have money, like first property I bought, it's, in Canada, we have something called first time home buyer, where you can actually kind of take out money from your Roth IRA, similar like, and it's tax free, right? So it's kind of deferring tax, right? So you take it out that amount, you won't get charged interest on it. And then I don't want to use my first time home buyer. So my mom wants to buy a bungalow in Toronto. I just say, Mom, here's $30,000 to $50,000. Here, I want my, just put in, I want my share and go for it. Right. That's my first house. We bought it 520. Right now it's probably, 800, 900,000. In hindsight, that was a good decision, right? And 2017, I bought another single family home. And just all money I save up from work, right? All my from overtime and increase of salary. I like to travel, but I don't buy unnecessarily stuff. I'm not a collector and all that. And just money I save from work, right? And then as it goes up, I refinance. So all those money now go into my trading account, right? So I bought 2 more single family in 2019, converted to like legal duplex, right? Upstairs, downstairs. I get exceptional rent because of a 2-unit, right? So all cash flowing, banks likes me. And all those money I refinance, I just put it back into my trading account. So when I make more from trading account, I can use those proceeds, those realized profit, and I go buy more real estate, right? So real estate is really good wealth generation. That's what gives me really the real estate full-time job, gave me my trading account size, right? Right now, my trading account is 300 to 400,000 now, but I should probably take some out to buy real estate, but I'm just because some of my VIP clients has a bigger account. So I want to benchmark them.
Right.
So, and I want to, get ahead of them. But once, the next evolution, if I start investing with partners, there's going to be millions. And so I can take out some of my money from my own account. I don't have to force to, to be ahead of them, right? Because I'm ahead of them in that category. So yeah, so there's a lot of things going on, but right now, my full-time job is kind of, running the course, running some marketing, just kept learning, reading books, walking my dogs, and focusing on the bigger vision thing, right? What's the next thing I do? And actually, I work with my partner in, north of Toronto, where he's a big flipper in the area, and some of the smaller profit deals, he just asked me to wholesale it out. And wholesaling, I'm not sure if you understand that concept, right? It's basically, we buy the house on the market value, we tap on, we add on a little bit of our fee, and we sell it to investor or first time home buyer. So let's say if it's the market value of that house is 500,000, we bought it for 400, right? We tap on 50,000. And then we sell it to an investor or first time home buyer. They'll be grateful because they bought a $50,000 equity going in.
Right.
And we win, they win, everyone's happy, right? Yeah. So very, very popular, especially the bidding wars happening here, right? It's a seller's market in Toronto and a 1-hour drive around Toronto. So it's harder to find deals, but there's never lack of buyers. So
yeah, we're seeing similar things here in different markets in the States for sure. A lot of the Midwestern and Southern cities where everyone's fleeing LA and New York City. So it's
a lot of big
YouTubers
are fleeing to Texas, right? Austin, Texas. And I know quite some YouTubers and even some big companies, right? Apple might move some of their division to Texas, and some of the big tech companies are moving because of the higher, lower their tax bracket, and just entire overhead is a lot lower, right? So.
Yeah, for sure. Kind of back to the point you were making previously, I think a lot of people underestimate the power of having a good job to at least get you started on the right foot. I mean, so many people are so ready to quit and retire early, and that's great. But I think a lot of people underestimate, like, if you're bringing in good money, the best thing you can do is, live below your means, save as much as possible. So then you can potentially leverage yourself into a position kind of like you did at an early age.
Yeah, that's a very good point. I talk about on different podcasts, but here's the thing. If you have a good paying job, don't quit unless you have a plan and unless you showcase of at least 1 to 2 years of your hard work outside of work. Like me, right. I was day trading for 2 years. So if you say you're going to do something, do it outside of the work, after work, or on weekend first, and prove it to yourself that you have what it takes to become an entrepreneur. It's all roses and sunshine, right? Like you probably know, but who knows when you're editing the video behind the scene and you're like constantly like you just want to stop, right? When I was day trading, so many times I don't want to write reports, but I know if I don't write reports, I don't improve.
Right.
So I have to stuck to the gun. I write reports until 12 o'clock, knowing I need to wake up at 6 the next day. So people say, why you look so tired at work? I'm like, yeah, but people don't see that. So if people say, hey, I want to quit my job now, I want to do what you do, showcase you can do that with having a job and try to replace that income, or at least have that mentality and say, hey, I see a track record. At least I know I could do it. I have the perseverance, then do it, right? Of course, if you quit your job like me, you'll do a lot faster, but I'm not advocating that, right? And there's like people with more responsibility in life, right? Right now I'm 30. I don't have, I have 2 dogs, friends' dogs, but I don't own kids. I don't, okay, not own kids. I don't have kids, right? I don't have a lot of liability, right? Besides, some life insurance, some car payment and all that, right? But to me, the best idea is to reduce the amount of things that you're paying that is unnecessarily, but pay for education, pay for getting yourself to the next level. Because one thing people cannot take away from you is your knowledge and your perseverance and your experience, right? But things they can take away is your toys, your cars, your house. They could take it away, but they cannot take away your what's in your head, right? And what you have gone through. So don't hesitate on investing in your education, but just make sure it's the right education. You can get out things out of it, and then, try to get the most out of it. But other than that, live below your means, save as much as possible, invest, right? That's the way where, let's say if you down the road, you want to buy toys, buy the things you want, go on vacation, take the proceeds, what you earn from your investment, and then spend it there. That's what I'm doing now, right? I'm not touching my nest egg. My nest egg is going up, even though if I might be looking at a bigger investment or buying, some toys for the marketing purpose and for investment purpose. But that's all from my proceeds from investment, right?
Yeah, I think that kind of segues into my next question. With you actually deciding to quit your job, did you kind of tell yourself, okay, I need to prove to myself for the next year that I can do this consistently before I actually pull the plug? Or did you just kind of say, I'm confident I can do this, and then you just quit? How did you kind of go across that thought process?
There's never a perfect time where you say, yeah, there's probably in the ideal world is that, hey, I plan everything out for the next 5-10 years. I replace all my income. Now I'm going to quit. But yes, I do have the trading profit. But again, trading profit could base on the market as well, right? So it's hovering up and down. So averaging out, yes, almost replace my full-time job. And then, I have some saving. I have real estate. So I know the worst thing that can happen is, I have to sell a house that I'll take out $200,000 of profits. But, I haven't done that so far. Thank God. But really, there's no perfect situation. And what happened at work was, I just fed up, right? And I think what I know what they're doing, but I think there's a bigger things to achieve that I could achieve for myself, and I can help out more people. But instead, I'm just slave driving people. So I don't like that. That's not me. That might be for some people. So I just told them, you can find someone better. They're like, so what do you mean you're quitting? I'm like, yeah, it's fine. You can find someone better. Like, take it, right? I know, I'm hopping in that leap of faith, but I think I have what it takes, right? And I proved to myself. So for me, there's no ideal situation, but make sure you talk with your wife and partner and make sure you're on board
Yeah, for sure.
before you do this, right? Or unless you have a plan. Otherwise, you're going to put yourself in fire, but of course you're going to grow faster, but it's going to be stressful, right? For however long, months, or even 1 to 2 years, right? Just be prepared for that. Don't think this is all, hey, it's all cool about like people talking about being entrepreneur. No, we figure things out on a daily basis. I work longer hours than ever, but I enjoy it. I just look at it time as, oh, wow, 10 p.m. Okay, maybe I should stop. I should start brain dumping, but people don't see that. Just think, Cody, you're walking your dog, all that. Yes, I'm more flexible. I can drop anything and fly back to Taiwan. That's where I'm from. But I think overall I work longer hours, but I really enjoy it, right? And I grow a lot faster, a lot of things that I never learned if I have a full-time job, because in full-time job, you're just in that small tunnel vision, right? This is why you need to do engineering stuff. That's it. You don't learn about marketing, you don't learn about accounting, you don't learn about finance. You don't learn like the visionary, where are we going as a company, right? Even though I was proposing a lot of stuff, they're like, Cody, that's great, but this is not your company. I'm like, okay, great. I respect that, right? So I'm like, okay, I can build my own company now, right?
Yeah, pretty locked in, especially working for big corporate companies. There's only
Yeah.
only so many things you can do to actually kind of show your creativity. And I think people talk a lot about work-life balance, as if work and life need to be these two contrary ideas. But as you can probably attest to, if you enjoy your work and it's part of your life, then you don't really need to worry too much about the balance part.
Here's the funny thing, Richard. So my dad told me this. He's like, if you enjoy your work, there are a lot of people that enjoy their work so much they work until they die. Then they die. And that's kind of half jokingly, right? If you really enjoy what you're doing, even if you're so tired that you work until you die, you're enjoying it, right? So
Exactly. Yeah.
there's no regret to that. So I want to be able to say that to my future self, right? And I know some people, not everyone's meant to be an entrepreneur, but I know I have what it takes. If I don't do it down the road, I will regret, right? So that's the thing I ask myself 10 years from now, where I regret if I don't do it. If that answer is yes, I'll do it now, right? So that's kind of the mentality I'm living in, right?
Yeah, not to mention kind of similar. I mean, you already mentioned this, but you don't have a whole lot of true responsibilities, like life altering responsibilities in terms of multiple kids you're trying to feed and that kind of stuff. So that's obviously a huge difference with somebody who is coming home to three hungry people that need to put food on the plate. It's a little bit of a different story.
Yeah, I mean, if that's the case for some of your audience, right? There, like I have seen people who've done it younger than me, right? I was telling you off record, I was like, talking with, a 16-year-old high school kid trying to give me advice on marketing and how some of my competitors are running their program. And I just, I listened to him. I'm like, I really admire you are doing this at 16, very genuine, have some success, right? Say, okay, I'll pay you 200 USD. Like, show me exactly what you learned so far. I'll pay for it. 6 hours, I'll pay you 200 USD. For him, he's like, wow, this is the big money I never seen before, right? But for me, is I want to encourage that. But at the same time, I know there's different value that he can bring, right? And I want to encourage more young people to do it. Now, on the flip side, yes, if you're a bit older, you have family and all that, you have more responsibility, but that's not the main reason to put you off on your dream or something to build it. You can always squeeze out 1 to 2 hours, whether that's kids after they go to sleep or wake up early before your kids wake up. Do the things then. If you cannot even do that, you don't have what it takes to become
Yep.
an entrepreneur, right? So that's, there's really, you can always come up with excuse, but at the end of the day is how do you schedule your time and how do you prioritize things, right? So
Yeah, for sure. A lot of people say, and I'm coming from a place of not having children either. So it's not like I have all this time I need to designate to them. So that being said, I don't know what the life is really like, but it seems like from even people that don't have kids that say they never have time, and then you ask them what they do at night, they're watching Netflix or whatever else. So that's a pretty normal thing, I feel like.
yeah, nothing wrong with Netflix, but you have to control it, right?
Yeah.
Make sure you're doing work in your most productive time. For me, it's like actually right now, right? From 9 to 5, that's when my brain is like so sharp. I can just jump on a podcast and share my journey, right? But I watch Netflix at night. I want to make sure my girlfriend's happy as well, right? I'm not just like a machine with no emotion, right? So
Yeah.
at night, I plan for my trip, upcoming trip to like Worcester and BC. I'm gonna visit one of my VIP clients. He bought a new snowmobile. We can go up to the top of the mountain, snowboard, ski down, right? So I use those off time at night to plan for these kind of stuff that require less brain power and less important, right? I won't say less important, but very important, but just not as challenging as what we're dealing with on a daily basis, right?
For sure. That's really awesome balance to have. I think a lot of people, when they hear about entrepreneurs, they hear about people selling options, whatever the case is. And a lot of those type of people preach, 24/7 work, no sleep, grind till you're dead. And it's like, in reality, they're probably not doing that to begin with, nor is that even healthy for somebody to be seeing that and thinking that they're not doing enough, even though they're probably doing more than the average person.
Yeah, Richard, this is a lesson I learned from doing working in corporate job and seeing different mentality in the sales industry, right? So here's the difference. My job was management, the way I get measured is how well my engineers are doing, how much work they push out. So I could be looking as busy as possible. If they don't push out work
Mm,
because they have a lack of training, they have a lack of sleep, they have a personal problem outside of work, they just cannot output work, it's still all on me.
yeah.
But from the sales perspective and entrepreneur perspective, right? From my perspective, I have no one to report to. I can look as busy or as lazy as I want, but at the end of the day is the results. Can I push out results? Whether there's more students, can I push out results from my trading group, right? Can I push out results to share more knowledge and constantly getting better? There's no measurements of that, and that's the world I'm getting into. So it's not how busy I look or anything. I don't report to anyone, but it's how much results can I get? So you get from the mentality of trying to look busy to how much results can you get it done? If you
Right.
can get it done in 15 to 30 minutes in a day, in this role, people appreciate that and say, Cody, I want to know how you do it. And that's what I'm teaching now. You don't have to look busy to me. I don't care. Yeah, in the beginning, you're going to put in work to learn it. But once you learn it, hey, if you don't want to deviate, you just spend 15 to 30 minutes. And a lot of my students are like, Cody, what's the next step? What should I do? I say, patient,
Yeah.
patient, right? It's in the market. It's not like the more you do, the more you earn. A lot of time it's that itch will actually get you in trouble, right? So you have to go through the market cycle to learn it, right? Go through what I tell my students, you have to go through 2 major recession to really learn it. So 2018 and March 2020, right? That's the time. If you've gone through that and then you survive and still up, I can say, yes, you're more prepared. But if you're just start trading from March this year to now and you say, this is easy, I look like a hero, then be
Everybody does.
careful. Be careful,
Yeah.
right? Because when the market is up, picks can fly, right? I'm not just anyone's pick. I'm probably one of the pick, but I'm just writing it. But when everyone's greedy, you have to get to be more careful. But more fearful, right? When everyone's fearful, that's when you go greedy, right? That's why in March I pull a lot of money, put in my stock trading account, and I just double down. So I was like getting really good results this year, right?
Yeah, it's awesome. Let's get into some of the specifics. And I want to caveat this to everybody listening. Cody does offer services to be able to learn more in depth about what he teaches. So, Cody, don't feel like you need to give away all the secrets when we're talking about this.
Yeah.
But I do want to just kind of overlay, at least so people have an understanding. First off, just starting off with, for those who are unaware, we've talked about it a few times on the podcast already, but what does selling options mean? Like what does that mean for you if you're just kind of explaining it quickly, and then we'll kind of talk about more of the specifics.
Yeah, love it. I think I have it down to how to explain it easily. So as a real estate investor, okay, this is even easier. So Richard, do you pay auto insurance?
Yeah.
Right. So you're paying auto insurance, or you're paying premium to the insurance company. What do you think the insurance company do with your premium right after they receive it?
They keep it and then they wait until potentially somebody has an accident, but maybe not.
Yeah, and they actually invest on those money. It's called float. That's what Warren Buffett has so much revenue coming in, because they have statistician behind it that did all the math based on the probability. This is how much we need to pay out. The worst case to the best case. So they know. So all the rest of the money from the regulation side, they can actually go and invest with that, right? So same thing now with selling option. We are the insurance company. We receive premium, which is like auto insurance policy premium from buyers, right? Then we see those buyers say, hey, I want to bet the market is going to go up, bet the markets go down. They pay a fee for that. Now we're receiving that, right? And since I'm selling put option, the worst case that can happen to me is own the stock, right, at the cheaper price, but I receive that premium up front. I know what's the probability of me have to buy 100 share of that stock, right? And then like I tell my student, I stick to companies only have a track record. I don't play with IPO. I don't play with highly speculated stuff. I want a company has been making money for the past 3 to 5 years, continue to grow top line, bottom line, and the outlook is good, whether there's another COVID or no COVID, right? They have to come out. They have to have enough cash to sustain economical downturn, right? So the idea is, we sell the put option to the buyer, right? The buyer buys it. Most of the time is actually institutional buyer. They buy stock. Now they need to hedge the position in case it goes down, because not all investors have the stomach to see that kind of swing. So they hedge their position. So when it goes up, there's a drag, right? Even if the market goes up by 10%, they only see 5%. But when the market goes down by 10%, they only go down by 5% because they have a hedge. So we sell premium to those buyer, the institutional buyer who are trying to hedge their position, or small amount are speculating and say, hey, maybe Apple will go down by 10%. So they try to buy put and try to cap their loss, right? So, but the worst case for us is really The worst case is we need to buy the stock at a cheaper price and we get paid a premium up front. So that premium can actually further reduce the cost of ownership when we buy the stock. That's the entire idea. So the market could pull back a little bit as long as above our strike price. It could stay the same. It could goes up. We always keep the premium. We make money, and we just buy it back and we sell another contract, right? And that's, the faster we could do it, the more money we can make, right? But again, the worst case, you buy a stock you want to buy anyway, right? Not stock advice, but I talk about Apple a lot, right? You buy Apple, yeah, right now it's 127. I sell the put at 120. If it never goes to 120, I keep the premium, move on. I write another 125, right? As it goes up, write another 130, right? So to me, that's a very relatively low risk for people who don't get it. But there's a lot of financial education out there, especially the banks and all the advisors. I don't think they truly understand it. So they categorize as a high risk. But if you really understand it, is that high risk or is that a lot lower risk than buying stocks outright, right? So
Yeah, I think I was in that same situation before I really did my research. All I heard was options, and you immediately think high risk, and you think about people buying these crazy,
yeah,
whether it's out of the money calls or whatever they're doing. But you don't realize that there's the other side of this. I didn't even realize that we could, as individuals, sell options to people. I thought it was all issued by the banks or the company or whatever. So I didn't even
exactly.
realize that was a possibility at first.
And you know what's a funny thing though, because I talk of a lot of like, because my partner works at the major bank called RBC in Canada, and I talk of some of their financial planner and wealth management and all that, right? Because I have some friends in there, and a lot of them might not fully understand this, and to the flip side of things, they don't want too many people to understand that, because if they know that, then they can't really say, hey, we can manage your money, right?
Right.
Because a lot of time once you realize it, individuals can make better returns than 90% of the mutual funds out there. 90% of mutual fund cannot even beat S&P 500. That's what I tell my students. If the mutual fund is benchmarking S&P, they can, and then need to get paid a small share of the profit. How do you think they can beat S&P? There's no way, right? So there's
Yeah.
really no way for them to beat that. So the only way you can beat that is, you have to do something different, right? So for me, I have a smaller watch list, which I know I watch this really well. When's their earning? How's the company doing for the past 5 years? When are the major events, right? So when the market turn on me, you have the confidence to average down, right? But a lot of day trader out there, they have 1,000 stocks in their watch list. They don't even know what that name is. They just look at the chart and say, yeah, this is gold.
Yeah.
And then when everything's well, yeah, it works most of the time. But when it doesn't, when the stocks start tanking, what do you do? Do you take loss? Do you average in? That's the question I constantly ask them, right? So what are you guys going to do? You have no confidence. You don't know what the company is, right? What are you going to do, right? Do you know all the thousands of company and you're on your watch list? Right? I don't think so, right? So that's that's the way I look at it. I don't want to find another job, but I want to have a lucrative passive income vehicle, right? So that's stock option meant to me, right?
Yeah, I think that makes sense. One thing that I'd like to hear your perspective on is you talk about having companies or only doing this with companies generally that, are profitable and have a track record to them. A lot of times that then comes with lower implied volatility. Like a lot of these more speculative plays, right? A lot of these EV guys, especially right now, I'm sure cannabis back in 2018, even a little bit right
Mm-hmm.
now because they're running,
Mm-hmm.
but the volatility is crazy, which is then
Yes,
giving you higher premium.
correct.
So to then play these more conservative guys, I'm guessing you just have to use a lot more capital. Like, how do you kind of balance between finding that high IV while also finding a play that if you are assigned that you're happy with the assignment?
Very great question, Richard. That's the question I get in my course as well. And that's a hard question to answer, but I'll try to answer from my own perspective. To me, that's more about, portfolio sizing and how do you chase the return versus risk, right? So how much do I diversify? But here's the thing, fundamental analysis is ahead of any technical or any trading profit. Okay. To me, am I comfortable owning that stock? Do I think that stock will excel in the long term, regardless of COVID or no COVID? Even coming out of COVID, will they become stronger? Can they survive another economical downturn? Those are the fundamental questions I ask myself, even before I look at IV. One of the biggest questions biggest problem I see is for people who never take the course or don't understand is, Cody, when IV is at 100, I get paid 10 times more. Yeah, great. 80, 90% of the time, it'll probably work. But that 10% of the time, if you get paid, 10%, 10%, but if the stock pull back 50%, now what, right? You own the stock at $50, now it's at 25. All the money you make in premium,
Yeah,
you probably,
it's gone.
it's gone and wipe out. And it could continue to go down more, right? So do you sell more puts on that, or what do you do? Take losses? And those are the position I don't want my student to get in, right? And you're having that greed mentality. It's like you pick stocks based on higher IV. Higher IV is there for a reason, because there's more volatility. There's more unknown, more uncertainty. So for me, when I tell my students, is always pick your stock based on, them, probably use their product, you're comfortable with them. Maybe you work in the industry. So, you have some competitive advantage over average people. So when I pull back, hey, this is actually a good time to get in. I have some information people don't know, right? That's the first step. Then within your watch list, there's going to be higher IV and lower IV, and you just balance out, right? It's not like I just pick on everything that has higher IV, because that can go against you when the market pull back. But you have to have a good balance of everything, right? And there's something called a seasonality. There certain stocks behave better in certain period of the time, but generally there's a sell in May and go away. So from May to October, the stock tend to pull back more because people are on vacation, all that. This year just been off because it just tank in March, and everyone all the fund managers like, we miss out, right? But generally, from statistical standpoint, for the last 90 years, from May to October, it's more quiet. Market tend to pull back but from October to the next year, May, people are more bullish, right? So things like that, we try to add everything in our favor. And we don't just blindsided by IV and how much premium we get paid, because eventually that'll bite us, right? And when that bite us, we can wipe out the gain for a long time, right?
Yeah, for sure. So do you look for, when you are looking for premium based off of, money that's potentially going to be locked up if you are assigned, do you look for a minimum, hey, this is the minimum gain percentage I'm looking for here? Or is it just kind of dependent on the situation?
So for me, you asked another great question. For me, I aim for example, if I'm going to sell a put on Apple, right? Apple right now is probably around 127. I haven't looked at the market this morning. That's how chill I am. I don't really have to look at it. Let's say if 127. So if I get a sign, I need to outlay $12,700, right? So when I sell a put, whether that's, I usually sell it out of money. If I'm very aggressive, very bullish, I'll sell it at the money, but not in the money.
Right.
Okay, I don't do that. Now, let's say if I sell a premium, I get paid $127. Okay, that's 1%, right? So my goal is to aim for at least get paid 1% of premium. Okay, so I get paid $127 over the strike price of 127, right? So that's I knew some math involved, but I know I done it enough that I know if I get paid 127 and it's 127 strike price, that's 1%, right? So if I cannot find that in a week, I'll go out to the second week. I'll always make sure I get paid more than 1 week. And the reason for that is if the market start rallying, right? If I aim for 0.5%, a couple of days out, the amount of rally, when we sell puts, we cap our upside, right? So if we only aim for 0.5%, the market can rally really hard. The most we can get is that 0.5%. So maybe $80, right? So I don't want that. But if I sell further out, right, I get paid $300. So even though it's going to decay smaller when it rally, but 50% of $300 is still more than 80% of $50, right? 80% of $50 is what? That's, I take $40, but 50% $300 is $150. So in order to get that balance, I aim for at least 1%. And if I can't find that, I'll go further out in expiration day. Right.
So you typically weeklies or bi-weeklies?
Yeah, I do it within 30 days, right? That's the way I do it, within 30 days, and tend to be shorter amount of time, but I try to balance out, my strike price and my expiration days. I spread it out, stagger a little bit, right?
The other thing I've been kind of trying to work through in my option selling journey is, okay, you sell a put, like we said on Apple, for 120. It's sitting at 127. and some negative news comes out and the stock tanks.
Mm-hmm.
Now you're approaching expiration and you need to make that decision of, okay, do I want to get assigned or do I want to roll this out, potentially
Yeah.
roll it, down?
Yeah.
And a lot of it, I think, depends on the stock. Do I want to actually hold this? Is this something I'm comfortable holding? So maybe the the tip you gave earlier answers one of those. If you're at least comfortable having the stock, you don't need to
Yeah.
worry about it.
That's a
Do you,
step one.
yeah,
Yeah.
do you have any thoughts on that when you're kind of making that decision? Do you ever roll?
Yeah. Yeah. Again, I do roll sometimes, but for my beginner students, I don't advocate rolling because it's very easy to fall into a hole where, hey, Cody, I want to rotate my capital a lot faster. So I want to keep rolling and all that. But the truth is, if you never get a sign, never gone through that feeling of your stock 10, like 10%, 20%, even 30% in March, you are not ready for the next pullback.
Yeah.
So I want them to go through a smaller scale of getting a sign and go through the mechanism and the mental side of things. And hey, you can write cover call. It's okay. You already decide you want to own the stock. Now you own the stock at a cheaper price. You're a lot better than anyone that bought it up top here, right? So and now you can get paid premium waiting for it to come back up. So I need them to practice that. So a lot of them is like, Cody, can you teach me how to roll? Can you, like, how do you get out like this? And I'm like, don't forget, you guys make that decision. You guys already get paid so much up front. Get a sign, practice. And then later down the road, if you really want to learn how to roll, then that's a different thing. It's going to be more active, more monitoring, right? You got to track it down on a spreadsheet, or there's a
Yeah.
way to run report, but you got to make sure you roll the correct way, right? And another thing is, for more advanced traders, say, hey, Cody, should I roll? Should I get a sign? Is look at how much premium, like how assuming when you're rolling, you're basically trying to fix the trade. You want to roll it more out of the money, right? Try to chase the current stock price down, right? So how much can you roll it down, right? How much premium can you receive by rolling? Or if you get a sign, how much can you receive by cover call? Then you compare that premium and look at your portfolio size and say, hey, how much money I have if I get a sign, how much money will it take up, right? Is there better opportunity out there? If there is, maybe you don't want to get a sign, right? There's many questions you can ask, but
Yeah.
you can look at from the premium side, from your portfolio sizing. Do you already have too much of the stock? You're too heavy in one particular stock, then maybe you will roll it. But if you have it balanced out well, a good percentage, like some tech, some consumer discretion, some traditional brick and mortar, more of a defensive like consumer staples, then you're more balanced out. Then yeah, you can get a sign and all that, right? But again, as going into the trade, you should already prepare for the worst case. Not that you get greedy and then you want to sell the highest premium. Now you need to get a sign. You're like, okay, Cody, I need to fix this, right?
Yeah.
And I don't want people to get in that situation because 90% of the time is fine. But if March happened again, right? I have personal coaching clients when Ivy was really low, trying to chase the premium, try to have a goal of like, I need to make 3% per month. As a day trader, that was day trader mentality. And I told them don't use margin, and they use margin, try to chase it because when Ivy's low, VIX is like between 9 to 12, you're not
Yeah.
getting paid anything, right? So they
Yeah.
try to chase it. Coming March, they got margin call, 50% off the $900,000 gone. They were crying on the side of the phone, and I don't know what to tell them, but I say, let me look at your watch list, right? And I saw it's all good stock. I think we'll survive it. So I say, okay. She's like, I got margin call half of it. Do I need to margin call myself the other half? I say, no, this is the worst time. This is actually when you need to find money, put more money in because it's going to go up from now. This is a historical best timing to buy, worst timing to sell. So if you get margin call, out of necessity, it's fine. But now's the time where you get your head straight. Okay. Keep doing the same strategy, but now you're on the way up. So she was able to make, loss, start from 900,000 down to 450 USD, now up to 1.8 million, right? I was just on a call with her. So I don't want people to go through that. And a lot of time I ask all my friends and family I taught and students over the years, I said, what's the biggest mistake? They say stock selection, margin usage, right? Those are two things that can really F you up.
Yeah.
Right. And other than that, you got to be patient and pick a stock and just let the strategy do its work. Don't need to set a goal of per month because as a day trader, yeah, you can do that. But as the strategy we're using, if you do that, you're forced to make trades that are not a good trade, and you
Yeah.
cannot defend that to your future self, right?
Yeah, then you just end up, like you said, making bad decisions because you're like, I need to make up for this 2% I haven't hit this month, and you chase IV and
Yeah.
you use margin, all those bad things. And then I kind of like the what you tell your beginner students, where just don't worry about rolling, because once you start worrying about rolling options or buying back and reselling, you're essentially becoming a day trader again, where you're like
Yes.
looking at the premium of the strikes and trying to play it out based off of the movement of the stock that day. So it kind of defeats the purpose of what you're trying to teach.
Yes, yes, and just more stress, right? Brings to you every Friday before the expiry. You have to, set up a time to roll it, and then that's when everyone's trying to roll, right? So
Yeah.
that's when the spread will be really big, right? Everyone's trying to do the same thing. So yeah, it depends on how active you want to be, but there's definitely next level thing you can learn. But again, doesn't mean the basic will not give you a good return. Sometimes the basic will give you a better return, right? And that's what a lot of people, new beginners, I try to chase the next shining things. They think they put in more time will get out more return and less risk. Not necessarily, right? And coming from day trader, right? And now I've done both sides. So I think I'm qualified to say that. But a lot of like this strategy, people will try to bash the day trader try to bash this strategy, but I come from both side of things. So I think I can objectively comment on that, right?
Yes. You mentioned your watch list a little bit earlier. We don't need specifics, but you said you keep it relatively small. How often are you updating that, and maybe a little bit more on what you're looking for when you're looking at those companies?
Yeah, like so really a stock market is a forward-looking mechanism, right? You probably heard that before. That means the stock market is basically not looking at what's happening now, but looking at 1 year from now, how the market is going to be doing. So let's say right now there's a stimulus, right? Biggest thing, stimulus and vaccine, right? So the market is looking at, okay, 1 year from now, if stimulus come out, a vaccine is 90% successful as they claim, what is going to happen in the industry? So they're looking at that and try to make trade accordingly instead of looking what we are doing now.
Right.
Okay, so there's a disconnection. It's a forward-looking mechanism. So for you, you got to decide, as the company I'm investing in, how is that going to be impacted by the vaccine or the stimulus, right? How is that going to be affected? There's probably things down the road, and there's a short-term thing and long-term thing. Does the company makes enough money for the next economical downturn? Do they have enough cash for anything that could happen, right? And do they have a track record of consistently making more money, top line, bottom line, for the past 3 to 5 years? Those are the things that are more important to ask, right? And this is a key thing I share in the course. I don't mind sharing here, is there's a difference between value investing and a popularity contest stocks. So a lot of the big name, a lot of EV is falling under the popularity contest. There's that hype. And a lot of time I can argue that it's almost religious.
Yeah.
People has the belief in it. So they don't care what the financial report look like. They don't care if there's 2 million away from going bankrupt. They don't care. They just like the CEO, and they like the company they like that dream. Everything's going to go EV. Then they just hammer on it. But on the other side, there's a value investor where they look at all the PE ratio, EPS, all the financial statement, balance sheet, and all that, right? But from what we have seen over the past years, all the value stock has been lagging. All the growth stock, especially the popularity contest stock, has been just skyrocketing. But at
Yeah.
some point, there might be an adjustment, right? So now that the vaccine is out, maybe the brick and mortar company will start going back to normal, but not so heavy in tech and all that, right? So you gotta put that into your consideration and make sure you're not heavy in certain industry, right? So that's my 2 cents on it.
Yeah, I like that. So aside from the options play, do you do any other investing in terms of just long holds on anything, or do you kind of mainly have cash ready to go so you can work your selling options?
Yeah, I kept increasing the size of my trading account, and I'm looking at buying bigger real estate project instead of just buying single family or a small multifamily less than 4 units. I'm looking at bigger multifamily, right? And just because all the partners has more capital, it just makes more sense to go for bigger scale, right? So I'm looking at those, right? But I still hold all my residential real estate. It still appreciate a lot. It still brings up a net worth, and that's a wealth generation that gives me more money to in my trading account. And meanwhile, I just built my, my YouTube business, my course, wholesaling stuff, and the idea is I reverse engineer. I say, what do I want my life to look like, right? So I want to be able to drop everything and go and fly back to Taiwan because a lot of my family's still back in Taiwan and friends. So that's what I hold myself against and say, does this thing I'm doing, can I do it anywhere in the world, right? That's why I big advocate of the stock and option trading. I find my real estate portfolio, I do have, a property manager and accountant, bookkeeper and all that. So that's in good hand. And if I know if shit hit the fan, right, and there's someone taking care of it, I just need to make the decision, remotely. And yeah, that's a decision really I make. And I was talking about, I'm looking at some exotic cars, right? And that's not to brag or anything. I'm looking at Porsche GT3. There's a new GT3 come out. It's probably priced at around $200,000, right? And it's quite pricey, but I'm looking at it because of marketing purpose. I already know what the license plate I'm going to put on and all that, but it's more about it holds value, right? A lot of people think that cars are just a depreciating asset, but hey, on the flip side of that, a supply and demand, when the demands really high, supply is really low. In order to, once you get that car, you're in that club. Once you're in that club, you can get a new car and you can actually buy the car for 200,000. You can sell it back to the dealership for 230.
Yeah.
People don't understand that game, and there's that game. But in order to get into that game, you need to pay a little bit of tuition fee, right? And now that I'm happy I'm in that shoes to do that, and I just love cars, right? I have friends that track their GT3. And I'm like, I want to be, I love it, right? And I can have more networking opportunity and an entire marketing purpose, right? And I enjoy it at the same time. I have to enjoy it, right? So
Sure.
that's why I'm looking at those, right? So not to brag or anything. There's a purpose behind it.
That's an interesting concept I haven't thought about before, where if it's a very kind of high level to get that type of car, the assumption is that majority of people who own that car have done something right in their life to get to where they are. And automatically you now have similarities with them, and it's almost like a networking tool. Obviously it wouldn't be smart for somebody without the money to go out there and buy a $200,000 car just to network, but that's something I haven't thought about before, where it allows you to network just within kind of that car world that you're in.
Yeah, not just networking opportunity. I mean, the reality is a lot of the time, I drive a Honda, right? I love my Honda car, but the reality is there's a lot of people out there judge you by the first 3 seconds. I'm not one of those people, but sometimes in order to get into the club, to even being considered as serious, some people do look at that. A lot of people do look at that and say, if you can't lay out 200,000, you're not part of our group, right? And that's a reality of things. Not that I'm advocate of that. I don't look at that, but there is a reality of that side. Plus, buying those cars, will allow me to write up on the accounting side, right? And there's a lot of benefits after, right? I know more people from the dealership side, and I know more just networking opportunity. Right now, I can join the Porsche racing track day, and the people I know are just at different level, right? If they have the leisure to go at a 9 to 5 time to do that or play golf and all that, right? They must be doing something wrong. Sorry, that's something right?
Or wrong, but they're not caught for it.
Unless they're trust fund baby. But again, a lot of people I've met, right, whether in private banking or real estate investor, they think outside of the box. They don't follow the traditional educational process to get to where they are. You can be a VP at a bank. You can pay $400,000, but you're still tied to a job. There's still a lot of stress. You cannot say you're free, right? And you're still trading time for money.
Yep.
And you cannot scale that, right? You're still a labor of a company, no matter how high up you are, right? So right now what I'm building is I want to build that system so I can be more remotely, but that machine, that system is still running on its own and generating passive income. So I'm truly free, right? So there's a part of you earn more, but are you doing the right thing that is scalable and one day you can pull back and the machine was still running? Or are you just trading your time for more money at a higher rate, right? Doing personal coaching. That's what I was doing, right? Doing personal coaching. Whatever I charge 200, I charge 300. Now I charge 500 USD per hour, but still I feel like I'm still working for money, right? And I
Yeah.
can't scale that because I'm
Yeah.
still doing it. The moment I don't do it, I don't get paid. So that's why, you have to put that into consideration, right? And you have to think long term, right? Long term, not just like short term, counting how many apples you have, right? There's 100 apples out there, but how do you get that? And how do you still have a life? And, because down the road, you're going to have more responsibility and liability, right? Kids, family, you know, parents who get older, right? I need to fly back more and more commitment, babysitter, maybe hire a chef and all that, right? That's what I'm looking at, right? And I want to be prepared for those.
Yeah, that makes sense. All good points. I don't know how much you are interested in this. I don't think I've ever heard you talk about it, but in the crypto world, Bitcoin just hit 20,000 USD for the first time this morning. So, do you do anything in cryptocurrency or have any thoughts on it?
Yeah. You know what's funny? I think I never shared this on podcast before, but I lost $10,000 USD on crypto before. Well, not necessarily on crypto, on wheat stock, right?
Mm,
Um, that was back in the days. I think that was in like 2012 when I was, still listening to stock tips, right, from friends. They think they know what they're doing. So back in the days, Aurora CEO, they went to, Australia, become a independent managing director of a company, and my that stock went from zero point 0.4 to 1.2. My friend said, this is the best time to buy. I put in 10,000 USD. And then the next thing I know, I look at it in years, like, it's zero point 0.2. I lost 80%. I
yeah.
asked my friend, say, what should I do with it? Right. Back in the days, I listened to that. He said, oh, I already exited at 0.8. I'm like, yeah, thanks for telling me that.
Yeah.
I, I want to punch him in the face. Right. So that's when I really stopped listening to stock tips, stop chasing the next shining object. Because a lot of time, there's a reason why people put out those news. There's a reason why they try to hype it out, right? Even like Pfizer, right? Pfizer, when the moment they put out or Madonna, right? When the moment they put out those news, the CEO is shaking off their stock on the other side.
Yeah.
Why? Yes, there's part of it where they want to take some profit, maybe averaging out, but why do they shake out so many stock? Because they probably don't see another time in the near future it's going to go that high, right?
Exactly. Yeah.
When you're buying, someone who knows is selling on the other side, right? So no stock advice, right? But cryptocurrency, I understand the concept of blockchain and all that. I just not comfortable enough to scale in that, right? Maybe, I can put in 10, 30, 50,000 in it, but it's some of the money I just say it's more of like my gambling money. So hey, whoever is investing crypto out there, don't take this as a personal thing. I know there's a bright future. There's decentralized and all that, transparency, you can't be manipulated. I understand all those, but, like cryptocurrency, it's a currency. It's not an investment. Okay. The people say they can't print more crypto, right? Are you sure? I mean, maybe down the road they can do something different, just like they're printing money now, right? Of course, they say right now, you can only mine so much, but it's an artificial thing.
Yeah.
They can just press the enter, and then now there's like a million more, right? BTC, right? Not to say that will happen, but I think I'm not comfortable enough to scale up more. And I know, in Japan, you can actually buy a house with cryptocurrency, right? They're like in and US, there's a supermarket where you get cash back from cryptocurrency.
Yeah.
That's a good sign for a bullish thing, that there are more business getting on board of this crypto idea. But just for me, I don't treat that as an investment, because that's a currency. It's almost like me playing with USD, right? I'm almost like a forex trader now, right? I can't see, if you want to hedge, yeah, that might be a better idea to hedge in crypto than gold. I mean,
I agree.
not stock
Yeah.
advice or anything, but I don't use it as appreciation thing. Maybe I'll use it as a hedge instead, right?
Yeah.
And yeah, that's all my 2 cents on it.
Yeah, I was just curious because I hadn't heard you talk about it before. Well, Cody, I ask everybody on the podcast the same question. So, if you had 24/7 access to one business mentor, dead or alive, who would you pick and why?
There's so many people I can think of, but again, there's a lot of gurus who write books. I'm sure they're more knowledgeable than what they talk about on the TV, because they have, just like my YouTube video, right? The amount of things we talk about is just way above my YouTube video, right? And I'm sure they're the same. They just can only share general philosophy or concept to attract attention, right? But to me, I want to have a good balance of people high up where I want to be in the future as my mentor, but at the same time, I want to have a mentor that has done it just now within the last 1 year,
Right.
has gone through what I've gone through. So they can tell me just like what I'm doing with my student. I've gone through all these mistakes. Don't do it. It doesn't work. Okay. Don't waste your time or money. You'll lose money on it, right? I want that as a mentor in business as well, right? Or even in life, like lifestyle thing, right? Do you think, even question like, should I have kids now? Or am I thinking too much? Should I have it later once I made it? Whatever, those questions, there's always a different side of things. And the way I treat mentor is not to take it 100% of their advice, but they have a different perspective. They've gone through it and there's reason for that, right? They give you. So there's no particular mentor. I still read books all the time. And I really enjoy reading books because it's almost, I'm talking of the author. I know what they've gone through, why they think that. Now, does that apply to my personal life? From my immigration background, from what I'm doing in real estate, stock option, building business, does that make sense? I have to compare apple to apple, right? So not all mentors are equal, but I do follow a lot of, like I love like Warren Buffett and Bill Gates. I think now that they make it, of course they want to stay top, but they have a bigger heart to try to make the society better, because money doesn't matter to them really.
Yeah.
They give away most of it. So those are more objective people. They don't have their own agenda. Maybe they do have their own agenda, but they have more capacity to do more good than bad.
Right.
Right. But instead of someone still hustling, someone that coaches, maybe we're in the same industry, right? They might have their own agenda, right? If I tell Cody what I'm doing now, maybe Cody will become the next one, right? So so a lot of things to think about, right? But at the end of the day is you have to constantly bring yourself to the next level. It's not one person, but it's more podcasts, like maybe your podcast and your YouTube. A lot of great people are sharing their idea and know where they came from. Does it apply to you? And make your own decision and take the responsibility for that decision. If you don't have I will say the guts, like lack of better words, the guts to even make decision, you are not going to become better, because you're going to make mistake. A lot of time I make mistake, but I figure it out and then make it better, right? It's like the Kaizen thing I learned at Honda, right? Continuous improvement. It's not that one thing you do right. It's quantity over quality. You do so much so you know what works or what doesn't. So
Right.
you're constantly doing that. It's not like just like stock goes up, even stock goes like this, right? So yeah, I don't have one mentor, but I like to look at people has a good heart, has success, and I think they continue to have success and why they're doing this and what they're doing.
I
Okay?
think that's a totally valid answer. There's so many good people out there to learn from, and picking a little bit from everybody is probably a good way to be, rounded in all those areas. So, Cody, man, thanks so much for doing this. It was a great way to start my Monday morning. Go ahead and shout out to everybody where they can learn more about you, and then any closing thoughts.
No, yeah. So people can find me on YouTube, right? There's you search up Cody Yeh, right? CodyYeh. I have a private Facebook group. It's for a public, but I just kept it private, right? You can put down the show notes maybe, or
For
it's
sure.
in the description of all my YouTube videos, right? And then I run a course. I run a handful of VIP clients. If people think that they don't want to read 20 more books and still cannot piece it together, and they want to just 10x it and pay the money, but you get the money back a lot faster and not spend the time and learn from someone who has a track record, they can look into it, right? And yeah, then keep doing what you're doing, what works, stop doing what doesn't work. Okay. The definition of insanity is just keep doing the same thing, hope for different results, right?
Yeah.
If it doesn't work, it doesn't work for a reason, right? Stop doing it. And yeah, and then keep getting better and keep listening to Richard's YouTube, all the
Appreciate
good
it.
content, right? So yeah, that's it.
Awesome. Thanks, Cody.
Yeah, take care.